So, since ThoughtSpot is all about turning data into actionable insights, I'd love your take on why do you feel it's important for a leadership team to understand metrics really well, especially when it comes to SaaS metrics?
Yeah. Yeah. So I think the best example I could give is from our recent, after 3 years of COVID, we had our SKO in person. We actually made it a CKO.
Wow.
We had the whole company there. And we did two. We did one here for our US and EMEA teams. And then we ended up going to India last week and doing the same there because we've got now over 200 people in India. But one of the sessions was when I did, which was on what we call metrics that matter. And we throw around a lot of metrics, but ones that we take for granted that perhaps in finance that people understand, ARR or NRR, et cetera. But I got some good input that like, hey, it might make sense just to break them down for people so they really understand them. And as you know, with SaaS, there's a bunch you could go after, but there's a few material ones that tend to be the common ones that kind of bubble to the surface. So I went through a 20-minute presentation. I defined what the metrics are, I defined why they're important, and then so that's one. Two, where are public companies, right? Because there's obviously a lot of transparency. Where are public companies on those metrics? And then what was quite interesting for folks is where are we relative to that? So it was good transparency around here's where we're like right there with where we want to be, top decile. Here's where we have some, continuing maturing to do in the business. And then the last piece was, hey, what does this mean for people in the room? And tying back to, for example, for a CS person, which is you're doing all this work to drive customer engagement and retention, et cetera. Ultimately, you need to be thinking about GRR, right, as one of those metrics. All the way to someone in product thinking about, for example, how do we build velocity in the business? Well, think about the product and the friction with onboarding and how do you simplify it? So I think bringing the metrics back to, what they mean, why they're important, and then what can people do about them was quite powerful and engaging for folks. And there was a lot of great feedback from it that like, okay, now I understand, what that means and what I can do to move the needle. And I think at the end of the day, that's to me the most important thing is, are they empowering where it's like, okay, I get it. I get our North Stars. So for example, it was ARR, it was gross margin, GRR, and NRR. And then we talked about magic ratio, given a big, sales focus, and then burn multiple for the overall company to be thinking about, our burn relative to our growth. And so I think people felt really empowered by it, understood it better, understood where we are, which is motivating, and that we're doing quite well on a lot of metrics, and then what they can do about it. And so to me, ultimately, that's what you want, right? I think knowledge is power. And we exist in the valley where there's such a big hype cycle, as you know, and it's like, what's important? Growth's important, burn's important, this and that. Forget it. Like, just focus on, at the end of the day, a quality business in SaaS is easy to understand, right?
Yeah.
And whatever the markets might be rewarding at that time, it's good to understand, but ultimately we're building towards what does a high quality SaaS business look like? And I think that's empowering for people to understand what those metrics are and come away feeling like, I can go do something with them. And what's been great to see is, we had our board meeting a couple of weeks later. We're all speaking the same language, talking about the key metrics we want to tie back to. We've now introduced in, our monthly sales all hands, the concept of GRR, NRR.
Oh,
So
amazing.
that to me is it, right? It's like, can you don't overwhelm people with metrics that they don't understand, and they don't understand why they matter, et cetera. Do things that connect to what people's day-to-day job is, and then and that gives some clarity. So that's why I think it's important. At the end of the day, these are businesses that are you can break down to a few core metrics, right? And so you're going to be measured by that if you're a public company, or certainly as any investors or board. So we should be thinking that way as a management team. So that's how I feel it's important, and it's great when it's empowering versus like, oh man, this is something we're never going to reach. It's great when it's empowering and people's like, okay, if I can do this, this, and this, if I can turn the dial on retention, if I can turn the dial on velocity each quarter, I can influence those. That's the best outcome.
That's really cool. Um, it reminds me of this book I read a little while ago called The Great Game of Business. I don't know if you've ever come across it. It's not like super well
Mm-hmm.
known or anything, but
Hmm.
it's like this person who owned a more traditional like manufacturing business. But the way that he ran it is he would have the company's sort of P&L as like a worksheet
Yeah.
every week or month, I forget. And he would have everyone come in and fill in the worksheet, and they would all have a copy of it. And basically, like the gross profit line would be like you'd have to calculate it, that wouldn't be filled in, and you basically got to work through it like a worksheet, And he called it a great game of business because he basically treated it as like a game, and your goal was to make the score go up, but the score was actually like the P&L, which is sort of what it is, but he made it a game for everyone rather than like a game for the CEO. And I thought that was so
Yeah.
brilliant.
I think it's great. The feedback that was there, which as a management team we get is, wow, we are very transparent as a company, right? Our quarterly all hands, our kickoffs, and one, it's we want to empower people. Two, candidly, it's our mission as a company, which is, I know you're in the business of helping people understand their performance. Our mission is to build a fact-driven world, right? So start at home and start doing that in your own business so you can feel the power of it. So you're that much more passionate, sort of selling that to your customers. So, we'll talk more. We use our product internally for that. All the metrics are visible. People can drill in, get it in real time. That's the whole idea, is put it, we want our customers to do that, having access to information in their own hands easily so they can drive decisions. We're like, look, that obviously needs to be our MO internally as well. So you're absolutely right. We all have a bias. We're obviously live in numbers, given our areas of focus, but I do believe that they're very powerful.
Yeah.
And you can cut down to the truth of a business, the true momentum, et cetera, by really understanding the drivers and the metrics.
Sometimes people treat these as like, oh, those are things investors care about. So we're doing it for the investors. But you said something that I think is pretty spot on. It's like, it's about building a good business. Like they care about it not for fun. They care about it because it reflects a good business. And I'm wondering, I suspect you've had that sort of conversation with people before. And I'm curious, like, how do you get people to go from, oh, I'm doing this for investors to, no, you're doing it for the business.
Yeah. Yeah, I think there's a few things. One is we're all obviously shareholders in the business, right? And there's various motivations for joining a startup, including just being able to do great work, get in there, make a difference. There's a bunch of things. Let's face it, financial outcome and having a good outcome is also part of the bet of joining a startup. So again, rather than watching the stock tickers and wondering what's happening in the markets, which frankly, especially in current environment or in any environment, can be quite distracting. My view is the only thing you have in your control is to build a good quality business. And so why not understand what that means?
Yeah.
So that is one, is just like, hey, it's, I think, centering. Two, yes, tying it back to things people want to do. So we talk about gross margin, for example, and hey, why does that matter? Yes, it indicates quality. It indicates an ability to, that customers have a willingness to pay, et cetera. But at the end of the day, with a constraint of cash flow on the bottom, higher gross margin means more OpEx. And that means you can go build that team you want to, can go run that marketing campaign, we can go invest in that next product. There is a direct benefit to each person in their job, because let's face it, no one's happy with the resources they're given. Everyone wants more. So I'm like, hey, drive gross margin expansion on 100 million of AR. Guess what? A couple of points, that's another couple million, which, yes, we have to put some of that back at the bottom line, but we're in growth mode. We're going to invest that. That, again, it drives a lot of great sort of behavior and motivation. And then, like I said, finally, like, yes, as you think about the difference between a higher NRR company and average, as you think about the difference between high ARR growth versus average, all these metrics makes a big difference ultimately in valuation, right? It's a very transparent industry, and that benefits everyone to be, a top decile company versus being, a bottom, 50%, big difference in trading multiples, et cetera. So that also is, I think, quite motivating to folks as well.
Yeah. I'm curious, there's, in the sort of theme of building a good business, there's a lot of ways to get at the same kind of thing, right? There's like a few different ways to get at sales efficiency. There's a few different ways to get at like overall operating margin efficiency. There's a few different ways to get at like, is our growth happening sustainably or not? How do you pick, like, do we use burn multiple or like a rule of 40, or do we use like LTV CAC or payback period? Like, how do you figure out which are the ones? Because at the end of the day, especially when you're getting a whole company on board, you can't get everything, so you're gonna have to prioritize, right?
Yeah. No, it's a great question, and we also, to your point, we track a broader list of master metrics. But as I think about what to noise versus signal and sharing with the company, it's a subset, right? The ones I shared. So I'll take you through why I picked these, and then, happy to talk about the others and why perhaps they're not as relevant yet, et cetera. But, the notion of just annual recurring revenue is, the recurring part is what? It's a headline metric. Like, let's face it, it's the size of your business. It's the first stat that people start with, and it's gives an indication of scale, but it's the concept also I like about it is recurring revenue, right? And so that concept of why are SaaS companies so valuable, because you have sticky customers that stay with you, that grow over time. So I really like ARR just as a headline focus, even though there's a bunch of things that go into it. I will talk about the sales and marketing efficiency. I do think not all revenue is equal, so gross margin is really important, right? We made a move as a business to SaaS over the last 3 years, and what's been great is our teams have been able to really focus on our SaaS hosting costs. We've moved from being customer on-prem deployment to now we fully host, and yet we've been able to maintain high 70s to 80% gross margin. That's been fantastic, right? That's driven, but it took a lot of focus and sort of thinking through how to optimize. And so I do think like quality of revenue is important. And so gross margins, especially in the context of moving your cost structure, became a real focus. Same thing with professional, services is it's not a big part of our revenue stream, but we want to be, there's two measures of PS. I mean, one is, are you seeing higher customer uplift, engagement, time to value, all those things? That's critically important there. We'd also like to run that at about gross margin break even. So that's how we think about kind of PS, right? But it gives a lens for people to think about those. I do think GRR and NRR, which we can, less on efficiency, but as just really key metrics to think about the quality of a SaaS business. It helps direct activities for not just CS, but for product and for sales, thinking about expand opportunities with our current base. And then on the efficiency, yes, there's so many different things. I think we're a business with multiple segments. And so the metrics we use is a reflection of where we are at a stage. And two things on that. One is we've gone from just an enterprise focus 3 years ago to now majors, enterprise, commercial, right? Each of those, as you could think about, has their own features in terms of, how long a sales cycle is. Very different for a majors where it might take 6 to 9 months to go, but then you're talking $1 million plus accounts. Enterprise, hopefully a little bit shorter, commercial, more velocity. And so we actually look at the sub-metrics for each of those because they do have a different experience, right? Retention is different. In commercial, where you're adding digital natives, take a look at more of a cohort view because you're going to have a bunch of companies joining. Some will churn and then the others will grow very nicely. So when I sort of zoom out, so for managing the business, we look at metrics for each. And an aggregate basis, I said, look, I like the magic ratio because it's our aggregate sales and marketing relative to how much ARR we're adding. And it just provides a nice lens on when you take that activity as a whole for a company, how are we doing on return on investment and go to market? So that provided, I think, the right company-wide lens, but we do dig into each of those segments. And we do that, in our product where we're running, live boards created for our company, and people can look, and I look at that quite regularly at how are each of our segments performing. So I think a granular view is important, but to keep the headline for a company, we like the magic ratio. And then we really only introduced, you could do burn multiple versus rule of 40. We're going through an inflection with our GAAP revenue as we've gone through the transition to SaaS. And so the GAAP revenue growth has had some noise in it given that. So I chose, to look at burn multiple as ARR growth relative to our burn. Because as we get through this and we're pretty much on the other side now, ARR growth and GAAP revenue growth come back in line. But there was some noise in it. So that's why I didn't use rule of 40 the last couple of years. But to me, the burn multiple was one. A couple of VCs obviously focus on it. I liked it because it's like everybody can be thinking about it, right? It's not just go to market, but it's also our R&D team. It's also our G&A teams. Hey, what are we burning as a whole relative to our growth? And finally, to close out, the reason I like it is we did a raise last year. We already had 150 of cash on our balance sheet. So we've got about 250 million of cash. So we have plenty of years of runway. So the question I get all the time is, why aren't we investing more? Why are we putting constraints on the business now? We've got more than enough cash, right? So back to your point of a lot of people think metrics are just for investors. I just want to build a business. Well, the burn has to kind of correlate and be appropriate for our growth rate and for our size of our business. And, the more you're growing, et cetera, the more you can invest in the business. So I thought burn multiple captured that nicely as a very easy ratio. And, you kind of tier among what does good look like versus, what does poor look like. And I thought it's just a good way to focus, again, at an aggregate company-wide level without too much noise in the number, being able to look at that and say, okay, I get it. So those are why we chose those metrics. Obviously, we can talk through any of those in more detail. But the important thing for me is managing the business, right, is very much a segment view and a lot more metrics below the surface. But reporting at an aggregate level for the company as a whole, those were the ones I found that, were the right leading ones and that provide transparency, but also, fairly simple.
I really love your point about sort of the segment view of the business. But I found that getting the segmented view of the business is like almost exponentially harder than getting the whole business view, because everything is set up to kind of report on the whole business because that's how you're going to raise money, that's how you're going to go public, all of those things. But when it comes to segment view, basically someone, you have to really care about being able to understand the business at that level. I agree with you that it's crucial, but I'm curious, like, how you think about why is it so important? Why is that like significantly higher level of effort so important to, because it's like a very hard data problem, right? You have to like essentially make sure that everything is tagged properly and like is able to be segmented and it's all like
Yeah.
intelligible and costs are allocated properly and all this stuff. It's not a trivial effort.
No, it's not. And, I think you could argue for a company that's got, $3 billion divisions, it's one thing. But if you're still, growing and you're at 100, going to 200 revenue, is it needed yet? And what I would say is ultimately, yes, I do believe it's important because they each operate pretty differently, right? So, we talked a little bit about the sort of the behavior of each of those segments, but a majors team, you're going after large accounts, few accounts, and you're spending time with them, and you're going to build each of your named accounts to hopefully, multi-million-dollar customers, right? We're fortunate. We've got now, a couple of dozen customers that have crossed $1 million. So these are some of the largest companies in the world where it's like, yeah, you are going to go and spend your time with them because it makes sense to, because, that initial land is only the tip of the iceberg, and over time you're going to build out. And so the sales cycle is longer, and the coverage ratio is sort of what someone is spending, their time they're spending is different. The pipeline might be a little less defined, right? Versus new opportunity, 100K opportunity. Here's my pipeline. This one is like, I know what I'm building towards. And then the associated expense with that, do you have an SC involved? Do you give them, you're going to give them a higher level perhaps of CS coverage as well, because those are larger accounts. So I think they have their own nuance as far as how you run them. And then on the other end, just to take it to the other, is commercial, right? Which is we want velocity. We want that to be our transaction business. And so want to see that rapid fire deals coming in every month. And we want to be able to have them benefit from our community, make that onboarding experience quite seamless. We won't scale if you need a CS person for every commercial account, right? We want to give them service and have a PS package in there. But over time, we want them to be the product to do the heavy lifting, so that those ratios are different in terms of CS reps to a customer in the commercial segment. So that helps us give it that focus. And then the CS team is organized, accordingly as well. The PS team is organized accordingly as well. And then churn. Some churn is okay, and it's okay in commercial where it's like, hey, we cast a wide net, we add a cohort. This was very much our experience at Square, where you're gonna lose some of that cohort, because either the health of their business, or otherwise. But the point is, once you establish and then you have stability, that cohort should be growing nicely with you because you've got businesses at their early stage of growth, and so that's also okay, right? You don't have to freak out about some of the early churn. There is a natural, I think, occurrence there, and so, right, just talking through that, pretty different way you manage those segments, and you incentivize and you think about behaviors. And so you can't do that if you're just looking at averages. You can't do that if you're just looking at aggregate. Our churn rate needs to be this, and everybody puts in that box. Frankly, our retention should be really high in majors and enterprise. It might be, a little lower in the first year of a commercial cohort. So those are all okay. And I coming back to why do metrics matter? It's because it gives you a lens through which to manage the business. I do think in having segments as different as that, it is important then to have the metrics as well that speak to that. The last piece I'd say is, we're at different stages of investment with each of those. So our enterprise business is our longest running business. Our metrics are more mature there. When I think about, the magic ratio and things, more reps are ramped, productivity is high, all those things, right? We know how to market to that segment. We're pretty dialed in. So you expect efficiency, but commercial is younger. And so we're on a different stage of maturing there in terms of thinking about those metrics. That's fine. The growth is there. Like, we see the opportunity. It's becoming a bigger and bigger part of our business. And we can look at that and say, hey, some level of burn, et cetera, inefficiency is okay because it's a younger business. So that's why I think it's important. We're a metrics driven business. We look at the business through that lens. We obviously take bets that we don't have an answer to, but we pretty quickly dial in, okay, what are we looking for? And it's the nature of our culture, again, just in terms of being an analytics business. And it's the nature of how we run the company, being on a product that allows you to have that visibility at any level of nuance for anyone in the company. So it kind of self, it's a self-fulfilling, if you will, prophecy to some extent.
Yeah, that's very cool. I mean, a lot of getting this right involves sort of the work involved to make sure that the data is right.
Yeah, yeah,
And then in general, for the finance teams, you have to bring in data from a lot of different places,
yeah,
and everything from operational to actual financial data, and all of these things have to come together in order for you to be able to sort of get that strategic view
yeah,
of the business that you
yeah.
want. I'm curious how you think about empowering your team with tooling to do this versus
Yes.
like where you spend the time to just get it right, or like how do you think about sort of um, the finance team and how you operationalize all this like awesome vision for what the finance team is able to do?
Yeah. No, it's a great question, and it's something that we've sort of looked at quite closely. Your ongoing general forecasting, accounting, right? Sort of just running the operation. We've got a good setup. We're a NetSuite shop, and then we use Adaptive Insights for our broader planning. And so, and then we plug in the commissions tools, et cetera, as well, equity platforms. So it's great the world we live in. You can bring in different SaaS platforms and use best of breed. So from an ongoing, just running the operation, if you will, we have a full suite of software platforms that we use. For specifically this, which is the analytics, if you will, understanding the business by segment, that becomes a bit of a partnership then with the groups that are involved. In our case, specifically sales ops, right? A lot of the data sits in Salesforce that we don't manage directly in finance, but it sits in Salesforce. Sales ops manages that. There's some data with the product team as well in thinking about just customer behavior, number of active users, all of that. And so finance becomes a center point. And what we find is then, pull it into a cloud platform like a Snowflake. And because you can't run analytics as well directly into a Salesforce, for example. And so we have our internal environment in which we've pulled that data into one place. And then we use a platform on top of that so that finance can build that view, do the cost allocations, et cetera, have the rules sitting in the background, and then provide that lens. And so that's where the finance team does then, manage that piece. In our case, as I mentioned, the FP&A piece is adaptive. The internal kind of publishing of segment level views, we do through our product on ThoughtSpot. And what's nice is it's organic, right? So when we started with, looking at a view of the business with enterprise, you had all these metrics we talked about, we had set up there, right? And then as commercial becomes a larger part of your business, we added that as well and looked at, okay, we have NRR. Let's now start to look at it by segment and each of those two different segments and how we're doing there. Majors added to that as well. And then let's look at, how are we doing in terms of what's the pipeline coverage that we expect in each of these businesses to hit our number for the quarter, thinking ahead to, public company forecasting and being able to guide the street. Because that's also quite, different is how much pipeline coverage converts into, deals in the quarter. Quite different for a majors team versus for example, a commercials team. So we rely and we work in partnership with product, with sales ops. We don't have a central analytics team per se. I think it's more of a collective effort. But the way we enable it is pull all that data into a cloud data warehouse and then run our platform, on top of it to create those views that help us run the business. And in our case, we do it in ThoughtSpot.
Organizationally, I'm assuming that there's some level of data engineering and data science folks that
Yes.
do make some of this possible with getting the data into Snowflake, making sure that it's transformed the right way, all that stuff. Is that organizationally within the finance team, or is that a separate team altogether?
So we have a IT team that manages our internal platforms and setting up, for example, in Snowflake, our environments, what we call, Champagne. And so that is done with our IT team that sits within the broader G&A organization, which
Got
we
it.
have in our organizational structure is, yes, we have some finance with IT, with people, with accounting. And so there's just good synergy as far as the data sharing and creating platforms within these groups. So in this particular case, yes, it sits within the same org, which I manage, but we also work quite closely with, I guess you'd call it the sort of data science team within product, which is looking at when we're making, for example, we rolled out consumption pricing not too long ago, right? Very different model in which to manage our business. As you can imagine there, it's like laser focus on customer time to value, getting onboarded, and then what are the key predictive elements of when they're ready to expand. Obviously, hopefully renew, but then ready to expand. And so we have to look at usage, how many monthly active customers do they have on the product, et cetera. And then more than that, it's like, we might have a customer with 100 monthly actives versus one with 10. The one with 10 is healthier because they're actually, they're power users. So it's running a lot of analytics there. So that sits within our product and engineering area, really deep product analytics and pulling source data. But ultimately, we work collectively, as a team to create the insight from that, and then more importantly, direct activity across the company from that.
Really cool. I feel like this is a thing that I feel really passionately about, but it's hard to execute on, is getting the product data to kind of be crossed with the financial data to be able to answer questions like predicting upsells or predicting churn, or but it feels like
Yeah.
so often those two areas get totally siloed. Like product data just lives with the product team and the financial data just lives with the finance team.
Yeah.
But I feel like there's so much to be gained by just getting it together.
Yeah. My view is, part of reporting is it's not just a passive activity, which is like, all right, here were the results last quarter. And it's, whoa, like here are where are the leading indicators of where things are going. And we've set some of priority. We've set GRR as a priority. We know that, monthly active users, as an example, might be the key leading indicator of propensity to churn or not. Let's make sure we're watching that every week, every month. My view is we shouldn't have any surprises, right? We're not yet a company with 5,000 customers, right? We have a few hundred. We're scaling. And so that we'll have a less of an ability to look at each customer, which is why in the commercial segment, the cohort view becomes more important. But, we're at a size where it's like, yeah, we should have a pulse on what's going on with each of our customers. And we don't have to be talking to them regularly. We just look at the dashboard, right? And look at their usage and frequency of usage and how is that going relative to where we thought they'd be. And if that is starting to soften, let's get engaged before it's month 11 and it's time to talk about renewal. Do it in month 3, month 4. That's where you could course correct and figure out what's going on. Because there's various reasons. Sometimes it's the data setup at our customer isn't quite ready yet. And so that's good feedback for the sales team. Like, hey, when you're picking your ideal customer profile, these pieces need to be in place. Sometimes, the initial champion left and it's like, hey, the team migrated and we got to make sure we're plugged in with, or otherwise. So there's various reasons. So my view is, don't wait for the churn to show up. Don't wait for your pipeline conversion number to surprise you at the end of the quarter. Be managing it actively, because that's how you can be nimble and stay ahead of it.
That's such a good point. You mentioned how at your last CKO or post-COVID CKO, you went through like all the sort of education part of like, here's the things that matter for us as a business. On an ongoing basis, are there like ThoughtSpot dashboards that folks in various departments are looking at to see all that stuff they learned back at CKO, like how that's going on a real-time basis?
Yeah, no, thanks for the opportunity to talk about that. Well, absolutely. So we call them live boards, and the only reason is they are just that. They are a start when you pull up, so all of us are tracking metrics in what is a live board. But the beauty of the product is you can then sort of, if we're using it on a monthly review, we can just drill in right there into the underlying activity to understand what was the blip, in customer engagement here in this segment, for example. Last month, we can drill in and look at the customers and look at their particular usage, et cetera. And so, just the nuances why we call it a live board. We do run the business on them. Our CMO, Scott Holden, has all of his key metrics in ThoughtSpot across pipeline generation, from where, by segment, et cetera, what's coming from events versus, online activity, et cetera. Our CRO uses it. Now we use third-party platforms as well, right? So we use other platforms for the team. We use Salesforce, et cetera, for the day-to-day guts of the business, because those are good platforms for tracking, CRM, et cetera. But ultimately, yes, when we're doing our reviews together, and he's going every morning to look at like, okay, how is my pipeline maturing or deal activity maturing? He does have that all in ThoughtSpot. We just had his monthly, sales all hands yesterday, and it starts with a review of those. And we might then otherwise use it as a management team where, we start the meeting with it and we can drill in and look at areas that, perhaps need addressing. So it is very much a data-driven culture. It is very much a transparent culture. Going back to the theme, initially we feel it's empowering for people to do it. It's a good way to run a business. And you're open about the good and the bad, because to me, there's no failures. It's like, hey, if there's an area that needs improving, that's just what it is. It's an area that needs improving. It's not like we suck and you throw in the towel. It's just like, go after it and work on the plan to improve it. Like, that's fine. The worst thing is to run away from your problems. The best thing is to have a culture where the problems are open and it's okay, and go run at them. If you have a culture of hiding problems, that's when you're in trouble, because people just want to avoid it. Versus, I see it as a great thing. Like, hey, like, we want to build a great business across the board. Where do we still have work to do? Let's get after it. So yes, we very much do that. And it's a big reason I came here, right? I think it's I think it's a good, healthy way to run a business. And I think people appreciate it. People appreciate the transparency. And I think those who have a good sort of mindset around it are like, let's get after it. Because it's not always, again, going back to, I find working in venture is interesting, in venture-backed companies, because you always want to maintain that, like, everything's great, we're going to the moon. And then all of a sudden the market changes, like, all right, we're not going to the moon. No, just be clear where you are on the journey every step of the way, because it is a journey. And, there's no surprises. Like, okay, we know we're really good here. Boom. We know we have some improvement here. Boom, we're doing it. And I think it's good. I think it's empowering. So, long answer to your question. But.
No, I couldn't agree more with both. A couple of things. One, judgment is actively dangerous because it encourages you to hide from your problems because you don't want to see the judgment instead of actually solving them. Couldn't agree more with that. And then I think the other thing I've definitely learned over my sort of career in venture-backed companies is people often think of like not scaring people with like what's going on, or like hiding certain things, or like finding the right messaging or whatever, where it turns out if you just trust people to like be able to have the maturity to handle the truth of what's going on, they will handle it exceptionally well. Like, if you don't trust them, they're not going to handle it really well. But if you just trust them to, everything works out great.
I absolutely. And I always, it's because companies will come out and be like, all this great press and this coverage, and it's like, whoa, things seem to be going amazingly. And then a few months later, there's some news that comes out, says, oh, it's churn is high or bumpy or this and that. So I'm like, hey, just stay grounded, stay grounded, build a great business as we're doing. And, the outcomes are going to be good. But I'm with you. I think we worry too much about that. And can you be open about, opportunities and challenges? And I absolutely think you have to trust people. I think people appreciate it and, want to help do something about it.
Yeah. As you think about companies at various stages, especially on the venture-backed journey, do you feel like the metrics that you should obsess over change over the course of that journey? Do you feel like a good business is a good business is a good business? How do you think about that?
Yeah, it's a really good question. I think it's part of the art or science of building a startup, which is, and I actually think it carries over into public companies, and I'll share my experience from Square. At the end of the day, you build value. If you start with a large market, right, and you start with a large market that is going to provide a runway for years to come, and then you have an offering that's differentiated, right, and really has an opportunity and some kind of catalyst for you in the market to go and capture, share. Either it's a brand new market starting from scratch, which everybody's running after with, start of the internet or the cloud, or you're entering a market in which there's still a lot of opportunity. At the end of the day, you have to stay focused on that. And what I mean by that is you have to stay entrepreneurial, right? And sort of keep going, because a lot of companies can build 500 million, maybe $1 billion, and then you're kind of done. And so I do think you always have to be thinking long-term and seed new ideas that can germinate into your next $1 billion business. And I learned that, in large part, that's what Square did, right? Square built a $1 billion business in the core SMB payments, but didn't sit on that. They built then an equally large business for consumer in Cash App, right? Which in the early days, it's mind blowing. And we were public at the time, and very candidly, if you just did a strategic MBA analysis, you'd say, "What the hell are we doing?" There are other payment networks out there that already do this, but it was a vision Jack had, and he said, "Look, we got to build a platform here of companies," and it obviously absolutely right. So I do think you have to maintain that at any stage, even as you're public, and say, look, Amazon's done this obviously really well. Google's built multiple products, maybe through M&A as well as organically. Because I do think that's how you build massive value over time, is not just saying, all right, we hit this use case, we penetrated the market, built a billion-dollar company. Okay, good. You're going to build a lot of value. But if you're thinking in multiple phases of growth, I think that's fun. It's also just a good way to think about it. Now,
Yeah.
you got to manage that with, yes, you do have to show in your core business you can build a really good, efficient, and financially prudent business. And so as you get more mature and you have maturity in that core product, you do have to take that with that lens, right? And especially as you think about going public, it's like, okay, I know what you care about, right? I've got gross margins that we know how to manage our expense base. We're fiscally kind of oriented towards that. We obviously have to show the ability to provide a good return on sales and marketing. Because it's not that you can't burn money, right? You can burn. It's just that you have to show that that's a good use of money
Right.
to be burning it, and you get it back in a certain period of time. And, those customers grow with you and you can keep them. And so I think you do start to get more focused on those metrics as you get further along into the maturity of a company. But I also think about it as the maturity of a product line. And you should always have some bets that are being seeded as well, which are the next things that your product can build on. Because I think building a platform is pretty exciting. And if you have customer trust, if you have a large enough TAM, right? If you've proven to them you can deliver on the initial pain point use case, I think you have you're going to have a seat at the table to introduce other things and be like, I can also help you with this. And you're going to be learning from your customers. So I think companies should never give up that entrepreneurial energy. And that sometimes happens when you've kind of gotten the win and gotten the initial one. So that's how I think about it. So yes, absolutely. As you get further along, you should be thinking about those efficiency markers. But you have to balance that with some entrepreneurial energy. The question, I think, which we maybe for another day and love your perspective, is how early do you start to focus on those efficiency metrics in the life of a business? Because there's one school of thought that's like, just get it now into the DNA, right? Companies that do PLG and learn how to do it early, man, they're cash flow positive really quickly because they've just super focused on, I want to make this experience really great for my customers. They come to my website, they self-onboard. So we have a Teams edition now that does that, right? And that's what that is. Like, how do you take out the friction? We don't want to touch it from a sales team. Find us, plug it into your own data. Data's in the cloud. We're in the cloud. Get up and running. Whoa, we wow you with the product, right? And then now maybe you become a bigger customer. Yeah. So like in that area, absolutely. Like from the start, there's no SDRs calling. There's no SCs getting involved. It's very much self-serve. So that's different though from, a majors account where we want to spend time with them, understand their pain points, et cetera. So I guess my point is, depending on the nature of your business, it is good to use metrics to drive what is the experience you're trying to create, right? And so I don't think it's ever, maybe what I'm trying to say is never too early to introduce metrics, because I think it helps you define what kind of company do we want to be.
I think that's such a good point in that it's never too early to introduce metrics. And then also you can be intentional about how you want to treat certain of them. And as long as you do it intentionally, it'll probably work, as opposed to ignoring them unintentionally.
Yeah, like we're going to go burn 10 million on this. We know we're going to experiment before we learn, right? But it can become a big product line for us. Yeah, that's a known bet, right? And at least you know what you're doing, you know what to measure, and you see the return. So I that's the lens I look at it. Never too early to introduce metrics. The rigor at which you apply depends on the nature of the product and the stage you're at. And always have that entrepreneurial energy to have some bets that can create your next billion-dollar business.
I love that. I have one last question for you, which is, given all the things you've seen in your career, if you could give a piece of advice to our core audience, a finance leader at a Series B company, what would you say?
I would say it comes back to what we've talked about, which is, and John Rainey, who was the CFO at PayPal and then now is CFO at Walmart, and I worked with him a little bit when we were together at PayPal. When he joined, he's like, we talked about why did you choose finance? You're like, people think sometimes of FP&A as passive, as just reporting. He said, look, I loved it because you have your finger on the pulse of the business, right? You really kind of see what's going on. And he was at United for a number of years, CFO there. So think about a big complex business. And so you kind of could direct things because you could see what's happening. And so my view is take that view. You're not a passive partner on the journey. You have an incredible position of influence because of the knowledge you have and because of the insight that you can get. We call our team finance and strategy. It's something we did at Square because we didn't see strategic as some whiteboard exercise, pie in the sky. Like, we kind of know where we're going as a company. We know where we want to play. The strategic decisions aren't that complex. Ultimately, it's how do you execute against them? And your execution against that strategy is what's going to define whether or not you win. And the best way to do that is have a data-driven view on your business, right? Have an ability to look at, like we were talking about, what bets am I making? How am I doing? As opposed to, hey, did I get the overall aggregate growth rate? No, like, did I actually execute in each of these products? And so you own that in finance, and you can bring a ton of visibility, right? We see a lot of our customers do that, and they use ThoughtSpot because it's like, I want to drive visibility in my business. So that's one. The second is, I think, take a partner approach. It is really hard to build and land and kind of go get those next few customers, right? It's like each day in the trenches for sales. When you're building product and you're on deadlines and you hate like having bugs, but it's going to happen. So I think my main point is have, finance is a more internal function. Obviously, you've got customers who are your board and your investors, et cetera, but a lot of the activity is internal. Have empathy, get to know what it takes to go run a sales cycle, get involved with like understanding the roadmap and how it's kind of set and what are the things that come up along the way. I think it'll just make you a better finance leader. You'll understand the business better. And when you do say no or saying, hey, look, we got to hold off on this, it's not just like, you're the bad cop. People know you're in there and roll up your sleeves and want to help build the business with them. And I think have empathy, be proactive, get to know a business, especially Series B where the finances aren't that complex. You can get in there and learn the business. I think that will serve finance leaders really well also, make you more effective, as well as just a better partner, to the business.
That's really cool. I have this sort of slightly unorthodox, I think, view, and I'm curious to get your take on it, which is that finance is actually just a data job. Not just a data job, but it is a data job. In that, like, almost everything about the job is about managing, understanding, and interpreting data for the rest of the company. I'm curious what you think of it.
That's an interesting way. I mean, let's talk through it. I've had a lens on it, which is it's a bit of an investor job, allocation of capital. Part of that is my bias. I did that for the first 10 years of my career. It's not just here's your budget. It's, hey, here are the bets we're making as a company. We're deciding to put dollars here versus there, right? Maybe open a new international market versus invest more, in the US. That's a decision. And, ultimately it's around creating a larger company. So making those decisions, I think it helps to have more than a passive lens, but a bit of a, investor lens. As far as data, I think you're absolutely right. I think we do talk about it being the source of truth. Finance is the source of truth. That's probably the third element I would have added is you got to remain objective, right? Yeah. You can't, in a company in which everybody's pulling for more resources, everybody wants to do more, you need to maintain that objective source of truth. And in that lens, I think you're absolutely right. Coming back to the data is really important. It's not, well, I think we should do this. It's here's what the data says. Yeah. Here's how we're doing. We made this bet 2 years ago. Here's how it's going. Maybe a pivot is needed, right? Or look, this area, we know we want to add more people, on the West Coast. But if you look at, for example, Japan, they're beating their number every quarter. Why wouldn't we add there? It's just a better, like, there's demand. It's proven, right? Yeah. And like, we know we're going to go put a next rep to work productively. So have the data. And I think it's good for the business. It creates trust and credibility for you and the finance team. And I think you're absolutely right. I think it is in large part a data job, but it's not just the reporting the data would be the difference, right? It's being able to make sense of it and help drive decisions from it. So there's that, however you want to call it, investor angle or judgment angle that sits on top of it as well.
Totally. I've actually always thought of the CEO job as the capital allocation job, and the CFO job as like the core input to the capital allocation.
I agree. Absolutely. Yeah. You have to advise the rest of the team on capital allocation.
This has been awesome. Thank you so much for taking the time. I feel like I learned a lot from it.
Yeah. No, I enjoyed this conversation.
I hope you enjoyed today's episode. Before you go, let me give you a super quick overview of what Subscript is, because chances are we can help you. I started Subscript because in my last business, I had this problem. We had this giant Google spreadsheet, and that's where we kept track of everything about our business. And if you're anything like me, you're a data-driven leader who really cares to understand numbers in order to make sure that you're making the right decisions. But when you're looking at a giant spreadsheet with lots of just tabs on tabs on tabs and lots of people with access, you're probably not looking at the right thing, because you can never be confident that someone didn't mess something up, or that someone didn't fat finger a number, or that you considered all the corner cases that you actually needed to consider. So that's what Subscript does. We help you understand your subscription business at a much deeper level than you ever thought possible. If you'd be interested in giving it a try, come check us out at subscript.com.